Hello traders and welcome to the section 4 of this course. This section is divided into two lectures to focus on two key aspects of wave principle. In the first lecture, we are looking at the use of Fibonacci ratios and how they prove invaluable in wave analysis by providing us the time and price advantage. And then I will explain the use of different ratio types through Forex examples. And in the second lecture, I will explain three key rules within the elite wave principle, which as an elite wave analyst, you will always keep in your mind while labeling waves. You will learn how these rules not only assist you in avoiding errors while you label waves, and how they also lead to making better trading decisions during your trading journey. And with that being said, it's time to study Fibonacci ratios. In the simplest form, Fibonacci ratios are defined as the mathematical ratios which can help identify the key support and resistance zones in the market and therefore determine key trading opportunities or setups. I'm going to teach you how Fibonacci ratio types give you a huge edge as a retail trader and if you use them properly with the wave analysis. There are three types of Fibonacci ratios which we will use in this strategy, and the first type is called Fibonacci internal retracements. They are called internal retracements because we will use key Fibonacci ratios up to 100% from a prior wave's low to high or high to low points. These ratios therefore identify possible support as market pulls back from a high or identify possible resistance when market pulls back from a low. During wave analysis, internal retracements are mostly used to identify termination point for corrective waves or corrections. The key internal retracements are: now let's look at a couple of examples of internal retracements. In the first example of internal retracement, we are looking at a daily chart of pound dollar. I've labeled waves within a complete elite wave cycle. We know that internal retracements uses previous high to low in a downtrend to project the termination of a correction. Therefore, using the high and low of this 5-wave sequence, we can plot internal retracement to project termination of ABC correction. Guys, we can see that price respected the 50% internal retracement on pound dollar. This is where I place my solid line. This is the line I will always use for internal retracements. Now let's look at another example but in an uptrend. This time we are looking at a 4-hour chart of Euro and Aussie dollar where price has rallied from a significant low. Using the same approach, I will plot internal retracement starting from low to high of the wave sequence. As you can see that price respected 50% internal retracement on this pair too. It is now time to study the next type of Fibonacci retracements. The second ratio type we use in this strategy is called external retracements. They are called external because ratios above 100% are used to project wave termination. External retracements are mostly used to project wave 3 price targets within a 5 wave sequence and wave C price target within an ABC sequence. For wave 3, price traveled by wave 1 is used to plot these retracements, and for wave C, price traveled by wave A is used to plot external retracement. The key external retracements are: let's study the external retracements using same examples. Once again, we are looking at pound dollar in a downtrend on a daily time frame, as we know that external retracements are used to project wave 3 termination in a 5 wave sequence and wave C termination in an ABC sequence. External retracements also use the prior high to low. However, we start from the termination point instead of starting point, as you see here. Look how price respects the 161.8% of external retracement on wave 3. And for external retracements, I will always use this solid dotted line to draw external retracements. Similarly, using the termination point of wave A, I will project wave C termination target using external retracement. Once again, 161.8% external retracement marked the termination of wave C. Now we look to study the final retracement type in this strategy. Fibonacci expansions. Unlike internal and external retracement, expansions use two previous waves at the same time to project the termination of the third wave. Therefore, expansions use 3 data points instead of 2. They are used in both corrections and impulse waves within Elliott wave principle. The key ratios are: finally, let's plot expansions using the same example. We know by now that expansions are used to project wave C termination. On MetaTrader 4, you have a different tab to use expansions. Now to project the termination of wave C, we use the complete price traveled by wave A and wave B, as you see here. And look, wave C terminates exactly where Fibonacci expansion 161.8% is. Similarly, I will plot the expansions on Euro and Aussie dollar chart. Guys, these retracements work in exactly the same way on any correction within a complete wave cycle, irrespective of the wave degree or time frame, hence making them so valuable when used with the wave principle. Now that we have learned how each of three Fibonacci ratio types function, it is now time to study how we will use them as a part of Fibonacci cluster. My definition of a price cluster is the combination of at least three Fibonacci price relationships that come together within a relatively tight range. These price clusters identify key support and resistance zones that can be considered as trade setups. Once used correctly, you will see markets bounce back from these retracement zones, hence offering pinpoint trade entries and exits. Let's study the same example to plot all three retracements to understand the value of a Fibonacci cluster. And now I will plot all three ratios on the same chart in the same order that we studied them to see how Fibonacci cluster represents strong support zone on this pair. Look how this zone terminated the correction, hence providing a strong sell opportunity. Now let's see how the cluster looks on Euro and Aussie dollar chart. This time the clusters represented a strong buy opportunity as our zone acted as a resistance zone. This also completes this lecture on Fibonacci ratios. I strongly recommend you to go and practice what you have learned so far before we progress. Also guys, if this course is proving valuable to you, please go and leave your honest ratings and reviews on the course, and I will see you in the next lecture.